This is the weekly economic and market update for the week ending August 19th, and I look forward to August 22nd. And my personal sentiment this right now is short term, I'm still 70% bullish, 30% bearish. Midterm, I'm 30% bullish, 70% bearish, and long term, I'm 100% bearish because I do believe still that next year we'll be in the midst of a severe recession or depression. So, um, let's take a look at investor sentiment. And we can see that it's pretty much the same as last week. Remember, this is a report that comes out uh, every Wednesday, and so it doesn't indicate anything that happened today. Obviously, the market's down on a large scale today, 270 points. It's certainly been worse, but we moved up 1.1% in our bullish sentiment to 33.3%, 29.5% neutral, and 37.2% bearish. My guess is that after today that bearish number probably inched up a little bit. We'll see what the next week or so. I've been waiting for a pullback for a while now. But it doesn't necessarily have to happen, and it could be that the shorts that are out there get squeezed, and we, may be off to Mars, and see what happens from there. Some of the economic and market information I'm looking at this week, and most of my commentary would probably be around the housing starts and housing in general. But CEO confidence is starting to plunge. This is something from this conference board that I found. I've heard about that this week, and you can see that the confidence in the market has plunged from about 80% at the maybe beginning of this year, end of last year, down to roughly 35% or so at this juncture. And, says, just pick out a few of these things, but the general assessment is that just 6% of CEOs reported economic conditions that were better compared to 6 months ago, down from 14%. 77% said conditions were worse, up from 61%. So you can see, some of the things I've been talking about is, the Fed uses lagging indicators like employment numbers, and because they look at these numbers, they're not seeing what's happening in our economy. It is deteriorating, and I don't have any reason to believe that they won't raise the federal fund rates in September. What it will be, I don't know. I've been hearing, half a percentage point, and that will just continue to make things worse here. But if they're going to wait for the employment numbers, then to start to go down, then I'm not sure that's the best indicator of how the economy's doing. We'll see. Check next week on GDP and what the Atlanta Fed is saying about GDP. I think last I looked, they said it would increase 1.2%. I do expect that number to deteriorate over time. One of the figures that came out this week, too, kind of indicate this narrative that things are not as rosy as I think the Fed believes they are. Maybe they're just bluffing. As we look at the United States, New York Empire State Manufacturing Index. And you can see some weakness here in these numbers starting from basically January. And then as we go through time, February, March, it was down 11.8%. April, now all of a sudden we get this big drop in August of 31.3%. And that's, that these are numbers that I don't expect to get better. It might get a little bit better maybe next month, but I think you're going to start seeing all negative numbers on manufacturing indexes. The DXY, and I've talked about this again. You can go back and listen to my episode on the Milkshake Theory, and how it takes liquidity, it being the 10-year, or excuse me, the dollar is taking liquidity from other countries and might be fueling the increase in our stock market upcoming. But you can see that the DXY is at 108.169. So that 10, I think it was pretty close to 109. Yeah, 109.294 is our high. We start getting up in there, you're going to start breaking things with the global economy as our, the attractiveness of the U.S. dollar will increase and more money will flow in to our markets, our bonds, a number of other things, and destroy the global economy. And so we'll see what happens with this number. I'm concerned that it has started back up again. And, maybe I'll get more concerned once it hits 109. Brent Johnson, the developer of the person who identified what he's calling the Milkshake Theory, talking about 112, 119. He gets to 119. Sorry, the wheels are falling off everything. So we'll see what happens with it. And like I said, my pessimism about the economy going into next year doesn't matter whether it comes. You can die a lot of different ways. Either the strength in the dollar could be one of them. It could be BRICS slowly, which is the Russia-China alliance, India alliance, and kind of coming up with new currency. They're all trying to get away from the U.S. dollar. And I saw where China is backing off its U.S. Treasury buying, so that'll make things even more interesting. 10-year Treasury. So, this is a number that I believe I mentioned last week that there was an expectation. Let's look this week that the number could go back up. It came close on the 10-year yield to 3%. It could go back up to 3.2%. Again, the bond market is the one that's doing most of the tightening in the economy, and not the Fed. The Fed is reacting, and so this number could go up. It gets back up to, again, to 3.25% to 3.5%. Then I'm going to be a little concerned about where I should be bullish and where I should be bearish. But we'll cross that bridge later. There's some room to run here. We'll see how it goes. Let's just look how much the sucker has moved, even in let's look at the year to date. We started the year at 1.63%. It's been as high as 3.48%, and it started back down at 2.5%. I hope that it kind of continued down that path. But now we got the dollar going up, and we also have the yield on the 10-year Treasury going up. I do expect us to reverse at some point. I don't know when, but I do expect it to reverse. And I believe I did a video this week that needs to be edited on David Hunter. His expectation is that it will go down to 2% or below, or lower, below, 2% or lower. And we'll see what happens with the treasuries. That's all I'm going to say on that for now. Housing starts. Okay, so this is kind of my commentary at this point. We're starting to see some weakness in the number of housing starts. I look at these figures. It's probably still within the control limits here. Probably, if I would put control limits, just eyeballing this, probably somewhere between an upper control limit of 2,000, lower control limit of 1,000. But I do expect these numbers to continue to deteriorate, and go down. We are starting to develop a real housing crisis with rents going up and things of that sort with inflation. And then also the new home sales figures are starting to uh, go down also. Let's just kind of take a look here. If we look at 10-year, um, you know, it has been increasing, but we're headed back towards the 2008, 2009 numbers, around 300 uh, uh, new home sales, you know, during this particular time period. We're working our way back down. That's not a very good trend there. So we'll see what happens on new home sales. And, I'm going to keep harping on this, and I'm trying to make this video a little bit shorter, but, oil is the key to everything. We need more oil. We need more drilling, and it's not like a light switch. We need more refineries. We're going to need oil for decades, and it affects everything that's out there. Inflation would go away if we just let the free market, go with whatever the price is, and it would drive costs down, drive the cost of oil down, and that think about it, transportation, of food, and oil is used in so many things, and I'm all for green. Go for it, except we're not there, and it's going to take 20 years to get there. So we're handicapping ourselves with China, and trying to compete with them because they don't care about the climate. Let's be honest. That was the first thing they dropped after the trip to Taiwan. So, it's hard for me not to mention oil often. I don't know where the price of oil is going right now. I think it's somewhere around $91 or so a barrel. At least WTI is. And we'll see what happens with that. But, I'm hoping that people will look at some of the leading indicators here and realize that this is not healthy, and that even though I'm talking about the stock market going up, and I'm bullish on that in the short term, it's because of a bizarre set of circumstances that I believe that it will hit new highs, and then it's going to be really ugly, as I've been calling for 80 to 90% crash at some point for quite a while. Anybody who follows me on Facebook, but that's what I wanted to cover this week. And remember, there is always a better way.